Hey everyone, it's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ Stocks, crypto assets, and interviews. It's Tuesday, July 11th. Hope you're doing awesome. And in this video, we're going to be doing an update on Canopy Growth stocks, specifically CGC on the NASDAQ. We're going to be doing some charting, some technical analysis. We had some big moves. We were up about 38% from the low of yesterday. And then we could still see an EMA 12 and 26 bull cross on the daily time frame. And we're also watching for a potential daily uptrend to confirm it is a daily equilibrium at the moment. So we'll discuss all that and more. Before we get to it though, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell. You'll be notified on any future live streams when I post a new video. There was an article here as well. MJ stocks gain as majority leader Schumer mentions MJ banking bill in letter. So you can see here, MJ stocks rise after Senate majority Chuck Schumer highlights passing of MJ banking bill as a priority for upcoming session. And then, like I said, from the low of yesterday, if we just take the low from yesterday to the high of the day today, we're up almost 38%. So congrats to the bulls who did buy that daily higher low. And as you can see, we're in an equilibrium here with the low, high, higher low, and higher high. So we're watching for a potential lower high to be forming here. That'll be indicated by a loss of the hourly uptrend. And then we'll look for another higher low compared to the low there at 40 cents. But in order to confirm this daily uptrend, we need to break 63.29 resistance. So 63 cents is going to be key on the NASDAQ, so USD. And then, like I said, we could still see an EMA 12 and 26 bull cross, which adds more confluence to the fact that we could see this daily uptrend confirmed, because when these moving averages cross with the shorter term, the 12 period below the 26 period, any kind of moving averages, whether it be just simple moving averages or exponential, when the shorter term's below the longer term and they cross, that's a bull cross. You can see what happened here. The last time it crossed bearish, we had a massive drop down. We had a bull cross with the shorter term below the longer term. Here, the shorter term was above the longer term when that crossed. It's a bear cross, and then a bull cross into another bear cross, and now we're potentially gearing up for another bull cross. So, like I said, this adds more confluence to the fact that we could see this daily uptrend confirmed, but it's all about that resistance there at 63 cents. Break that, we're in a daily uptrend, and then we zoom out to the weekly time frame and we watch for the weekly bounce to continue. One thing I did mention on my previous CGC video was that we have a weekly bear flag on watch as well. We had the high to the low, and then a lower high forming on this weekly bounce. As you can see, we broke the high of the previous weekly candle here last week, but it's a weekly inside bar at the moment, tightening range, and that's indicated by the daily equilibrium, right? Or we're just searching for direction. So key resistance is going to be 63 cents, and key support is that low there, the 52-week low at 38 cents. So if we break this bearish, that's going to confirm the weekly bear flag more than likely. So if we lose 38 cents, that confirms the weekly bear flag. And to get the measured move, you just take the high to the low, move it out to your 0.32 fib, and the measured move is about 21 cents. Doesn't mean we have to get there. No, absolutely. We are coming off weekly oversold, and with that bit of actually, there was no lower wick there, but we basically touched down on monthly oversold. And I've said this time and time again, if you know nothing about technical analysis and charting, if you just generally buy when we're down here in the oversold territory and then sell when we're overbought, again, not telling you to buy, sell, or hold. This is for entertainment purposes only, definitely not financial advice. You have to make your own decision. But I do hold Canopy in my MJ portfolio. It's only about 7% of my whole MJ portfolio. I might increase it up to about 10%, but realistically, I'm not going to be going too heavy on this one because, like I said, I'm not seeing any clear path to profitability, at least for the next couple of years. I don't think they're gonna sink. I think they will swim long term. But this is definitely going to be a rocky road, but definitely some serious risk, but some serious reward as well. I would say reward outweighing the risk, but again, as long as you're not breaking the golden rule, investing any more than you're willing to lose. But like I said, in order to negate this weekly bear flag, we need to get above the 0.32 fib. So if we break 63 cents, that confirms the daily uptrend, a break of the daily equilibrium bullish, and then we look for that key resistance at the 0.32 fib at 71 cents. If we get over 71 cents, after confirming the daily uptrend with a break of 63 cents, and if we get over 71, that's going to negate the weekly bear flag. So in order to negate this weekly bear flag, we need to break that 0.32 fib at 71 cents, and then in order to confirm the weekly bear flag, we need to lose 38 cents, and then the measured move, if confirmed, is around 21 cents. I don't think that's the most likely scenario. I think that we're more than likely going to see more upside from here, but again, the S&P 500, the broader market was strong today, adding more bullishness to the MJ space. So instead of headwinds, it was tailwinds. So the wind at our backs, so to speak, helping bulls. But if we do see any pullback in the broader market and some weakness in MJ, that could confirm this weekly bear flag. So not ruling out the possibility of one more leg down, but again, I'm not thinking that's the most likely scenario. At this point, I think 60% chance we break a bullish and 40% chance we see another leg down. But if we do see another leg down, it'll just be a buying opportunity. I'll be using it to buy, but I'll be holding off. I might add some closer to 30 cents and then another order closer to 20 cents. So I might add 1 or 2 more orders, like I said, to bump up my exposure to Canopy to around 10% of my overall MJ portfolio dollar-wise. And then if we zoom out to the monthly bounce hasn't even started yet. So in order to start the monthly bounce, we need to break 86 cents. So that would be another opportunity to go long. You don't need to nail the exact bottom either. It just depends if you're wanting to be more aggressive than conservative, right? I'm more aggressive. So if you're more conservative, you could wait for a monthly bounce to start as well. You could say, okay, if 86 cents breaks, then the monthly bounce will be underway, and we have no resistance all the way up to EMA 12 is the most nearby resistance. Not even any price action resistance nearby. There is a level there at $3.22, but even just on a monthly bounce confirmation and a move up to EMA 12 there, that's about 197% of upside. So that could be a nice swing trade opportunity. But again, I'm not telling you to buy, sell, or hold. I'm just giving some opportunities and thinking out loud. And it's a monthly inside bar as well. So I would expect a break over the next couple of months. If it's not this month, in order to start the monthly bounce, we'd have to go from the high there another 35%. So it's entirely possible that we don't do it this month. Still 19 days though left in the month. Anything's possible, but it's possible we start the monthly bounce next month, at which case the high of this month will be key going into next month, and that could be a level that you could even set a stop buy at or enter a swing trade if we break that resistance, looking for some decent upside on a monthly bounce, because generally we gravitate back to these moving averages, right? So in this case, the exponential on the monthly time frame, you can see we had a bull cross and then we had a bear cross, massive downside, bull cross, massive upside, bear cross, massive downside. So we generally gravitate, we get above it, we get exuberant to the upside, we get overbought, we come back, test it as support, lose it, confirm it as resistance, we get close to oversold, then we break above resistance, confirm it as new support, and then like I said, we generally gravitate back towards it. But nothing's a guarantee, but like I said, I think there's enough risk to reward benefit here to seriously add some capital behind CGC. Again, not going to invest my life savings. I think it'll be at least 2025 before they achieve profitability. But if they get acreage, and once it's federally permissible, they have Canopy USA starting now as well, and they're really starting to right the ship and cut costs. If we can get a weekly candle close, preferably 2 weekly candle closes over 71 cents USD as well, it's looking really, really good. I mentioned this in my previous video as well, that we had an all-time high record daily volume, which is back here on July 3rd. And we have all-time high record weekly volume now as well on the NASDAQ. And then on the monthly time frame, we're probably going to set a record here for monthly volume as well. And usually volume precedes price. So this is good. We could potentially be seeing a bottom being set and a volume climax. And this is what we want to see. Still lots of time. Like I said, 19 days left in the monthly candle. So anything's possible at this point. But like I said, definitely enough risk to reward. And then if we can get 2, preferably 3, but minimum 2 weekly candle closes over 71 cents there, the 10-week moving average, we're looking really good. The stochastic and the MACD are seeing bull crosses as well. So this is looking promising. And then we had the bear cross of the weekly moving averages, with the shorter term moving averages on the weekly above the 50 above the 200 weekly. When that crossed, we saw a massive downside. Now we're gearing up for a potential cross of those, bull cross of those same moving averages on the weekly over the next probably several months, 2 to 3 months at least, I would think. And then in terms of the daily moving averages, we had a golden cross. We had some serious upside, and then we went into a death cross with the 50 above the 200-day moving average. Whenever the shorter term is the 50 and the 200 is below it, that's a death cross on the daily time frame. Golden cross when the 50 is below the 200 and they cross, death cross on the inverse. And like I said, we're potentially set for another golden cross over the next few months. I would say at least 2 to 3 months. We almost had one back here in the end of 2022, beginning of part of 2023, but we found resistance at the 200-day moving average. So now, like I said, it's at least a couple months before we see that bull cross, and then we still need to confirm a monthly uptrend, but we still have to start the monthly bounce as well to confirm that even being close. So going into there, let me know what you think of this in the comments below. Hopefully you're able to add some position and kind of lower your cost average before these big moves happened. But like I said, not ruling out one more possibility of the leg down. I don't think that's the most likely scenario. And this is what we want to see near a bottom as well. These massive, 30% moves, 60% moves off of a bottom. That is usually indicating that the buyers and sellers are starting to get exhausted, and that we could start to see momentum shift the other way. But going into there, it's Rod with Power Group. Thanks again for joining us on the Pursuit of Wealth. We'll see you in the next video.